break down and understand that like you can invest at any time and make money, and it's not just about positively gearing, as Sam said.
Well, it's a balanced portfolio because you have good cash flow and trust, but then a lot of people, there's this big buzzword going around like, oh, I'm positively geared, and that's cool, but you've got to. I just got to educate you on, well, you can go get positively geared properties. You're probably going to be in locations that aren't within close proximity to a major CBD. Yeah. And, the capital growth prospects are still there, but there's always a bit of a trade-off.
What do you weigh up? Yeah, exactly. What do you weigh up? Like, do you want to earn an extra $100 a week, so $5,000 a year, or would you rather earn 90 grand or 95 grand a year? I mean, in 9 months, from capital growth. Like, what would you rather? Like, I'll take the $5,000 or the 95 grand.
Yeah,
like it's.
It depends on your strategy too. If you are requiring a heavy accumulation phase, you're going to need that cash flow to help support it. But then there's different ways where you've got a positively geared property. You've now got a slightly negative to neutral, which over 2 to 3 years will become positive anyway. Yeah. The main thing is you're not investing in a location that is on the outskirts of town with heaps of land supply. Absolutely. Like you can get those yielding properties at 7-8%, but they might also be in pockets of Rockhampton at the moment. You can get those higher yielding, but you're getting a fibro house with asbestos. Asbestos isn't bad. It's not like the worst thing in the world. As long as it doesn't crack and break. But the age of the improvements are quite old, so you don't get any depreciation, and your maintenance costs might be slightly higher. So that initial cash flow you get on the Excel spreadsheet looks healthy, but you got to factor in. Well, I don't really know what the maintenance could be. It could be $0 a year. It could be $2,000. It could be $5,000. If you're cash flow positive for $100 a week, there goes your $5,000 pretty quick.
It's funny to think that as well, some people may have the perception that for borrowing capacity, they might be really fixated that like I need to have something that's positively geared for my borrowing capacity so you can continue lending. However, if you are a little bit negatively geared like this one was and is, and you've got an extra growth from capital growth, that can increase your borrowing capacity and exceed it far more than $100 or so a week.
Well, flip that on the other side too. You now have an asset because your LVR is lower. Your cash flow is improved. So there's always, it's never one metric in anything in life. I find it's always you got to look at multiple aspects to make an educated decision. And it goes back to a classic comment, which is you don't know what you don't know. And you're not meant to. I mean, there's just so much information.
That's why we're here, guys. Like, listen to the podcast and reach out. hello@propertypals.au.
And another thing too, different strategies, right? Like next property we're looking at for yourself, we're going to look into what's the opportunity of a commercial play because that's a higher income asset. There's pros and cons on that front as well, and we also had a mate that's recently bought a commercial asset. Well, it's under contract at the moment. So Dano, if you're listening to this one, we're coming for you to get you on the pod. I reckon it'll be a really interesting conversation because he's a lovely human that needs to work out a bit more, I reckon. maybe work on his golf.
Especially the other day, all he does is like play golf and like work out. He's coming to Japan actually with us for a ski trip. So we should get him on the pod before Japan actually.
Yeah, he's a good human.
Yeah.
But he needs to
share his knowledge.
And his journey. I mean,
because actually his story before that, like in property, because I remember he came and chatted to me. He's like, "Oh, Jared, I'm going to buy a business. Like, this is like, what can I do?" And I was like, "Yeah, let's think about business." And then I sort of steered him towards the property route. And what he has done with his 2 properties and the wealth that he had built to get into the commercial play, it's pretty cool. Like, we should definitely get him and talk about like the pre-work to get to commercial.
Yeah, and his strategy too was really interesting because he worked in and he had to. Renting was a more beneficial option for him because he got a lot of rent subsidies through his work, and it didn't make sense to go into principal place of residence in that region, and then it was an investment play, and he was looking for strong cash flow returns and had quite a healthy deposit. So the commercial route, and he was appetite for that from his partner, and they went for it and they had a crack, and I think they've done really, really well. But their journey is something that people need to hear, in my opinion, because it wasn't smooth sailing. I mean, they've been looking around for over nearly 9 months.
Yeah.
And just the patience and then helping them.
So I started chatting to them almost a year ago, like just under a year ago, about and then
Anyway,
all right, we'll wrap this one up. Hello at propertypals.au. If you got questions, reach out. If you need some help, we're here for you guys.
Yeah, see you on the next one.